Just want to summarize here. Ukraine is in a very strategic location, and why Russia want to attack, right? They doesn't want them to join NATO. If you look at the bigger picture, right, a lot of the European countries, they are sort of allies to US, and so they can put strategic location, to detect any missile that's coming out. Okay, so they can shoot down straight away. So if Ukraine join NATO, right, that means they will become the European allies as well, right? Along this border here, right, they can put something to monitor Russia activities, right? So if any missile, whatever, they can shut it down. And so Russia doesn't feel secure where they are surrounded by Europe, which is not their allies. Okay, on the other side is China, which is their ally, so it's fine. Okay, so on this side, on the west side, right, is actually all not their allies. So they feel a bit threatened. Okay, yeah, this is just one of it. Besides, later on I will share the rest, right? So, but and also Ukraine is the second largest country in the whole Europe, right? So it's considered pretty big around here, right? Border is not a small space. Yeah. Okay, and they do not want them to have any nuclear weapon that can cause a risk to Russia. Okay, so that's why they want to make sure they have they are demilitarized, or to reduce the risk to Russia, right? In case there's a nuclear weapon, embedded here. Because of US or Europe, and US intervention to provide them weapons, right, is even making them feel worse. Okay. Okay, so what's the impact to the world? Okay, the first one is, let's look at the Russia top export over here. Right, you can see that crude oil is one of the top. Okay, although they also export weapons. Right, so you can see this is in USD million, that means this is billion, right? $110 billion, so which is very significant. Then petroleum, these are all related to the oil and gas, right? Then machinery, right? Ferrous metal. Then there's also coal, right? Which cause coal price to go up. Wheat, right? This is an input to a lot of F&B, right? So F&B sector is impacted. Aluminium, affecting the property price and a lot of manufacturing inputs, right? And fertilizer. Okay, this one has an impact to this company called CF, right? Benefit CF, which is a US producer for fertilizer. I used to trade CF long time ago, and now I don't like to go into too many sectors. Okay, so this is so you can see these are the commodities that will be impacted. Okay, so this is how we study, right? If there's a next war, okay, so hopefully no. Then the most important for you to study is what are the main export for the country that will be impacted. Okay, and the other one is the export and import, because the other way around is also important, because there could be sanction. Okay, then the next one is Ukraine, right? What is impacted in Ukraine? Ukraine is not as big, because if you look at Russia is a very big economy. It's 150. If you look at the total spot here, it's 152 billion. Just crude oil alone, $110 billion. Okay. Whereas for Ukraine is in the smaller range of the billion, but they have cereal, right, iron and steel, which will affect the property sector, right, and a lot of their export is to Europe. All right, so let's look at the Ukraine top export here. Okay, mainly cereals and iron and steel, and United States. Okay, how does it impact US as well? Let's look at the US top export, right, oil. So when there's a sanction, right, probably Europe will not import from Russia. Okay, that's why oil price shoot up as well. So they can import from US, so it will benefit US oil industry. Okay, because 14% of the US economy is oil, and the rest is weapon, okay, machinery, nuclear reactors, and boilers, right? Also benefit the US economy, the defense sector. Then of course electronics, not so much from Russia. Okay, so indirectly this will benefit two major sectors in the US. Okay, so where is the top export from Russia by country, right? So you can see the EU. Okay, so they need EU. So when EU have a sanction on Russia, it's actually very bad for Russia economy. The next one is China, which may still continue because it's their allies, right? But you can see Europe is a bigger market, right? More than 3 times compared to China. But they do need China, right? That's their next best friend right now. Okay, so the rest we don't have to talk about it. All these are not their allies, all these are enemy. Okay, yeah, but the biggest one is the European Union. Okay, all right. Then the other one is what's the impact on crude oil? crude oil, right? So the US, UK, and Canada have banned the import of Russian oil, right? And many companies are self-sanctioning, even without government intervention, partly for fear of reputation damage. They say, okay, because of Russia war, as a company to maintain their reputation as a good company, then they do not want to import from Russia. So that means it will benefit those other countries. Yeah. So you can see that the Russia is the second largest oil producer. Okay. US is number 4. Okay, so it actually benefits Saudi Arabia a lot. So because if they cannot import from Russia, then they will import from the rest. Then the next one is the key destination, right? You can see China, the percentage is very high in terms of the imports. Okay, after that is Germany. The next one, other than crude oil, is gasoline, right? You can see that US is number 1 producer, so it also benefits US. Because Russia is second, so if you cannot buy from Russia, US benefit. Okay, and the main exporter is also to Europe. Yeah, and Europe is imposing sanction. Then the third one is coal, right? You can see it's number 3, right? So it benefits Australia. So you can see Australia index go up, Australia currency also go up. Okay. So in fact, I was trading Aussie yen and also Aussie index. So if you know the correlation, you can benefit from it. Yeah. Then the main export also Europe and China. Okay. So coal price, well, it will impact those companies that are still very reliant on coal. And why energy sector go up? How is coal related to energy? It's used on power generation, and you can see that China still 40% depend on oil, right? And they are a big importer, so it does impact their supply. But if they continue to import from Russia, that should be okay. But it impact the input price because coal price go up, right? That means it impact China energy sector as well. Okay, so those are the core risks on the Russia-Ukraine tension. You can actually read up more, but I'm just selecting the main one. There's wheat impact and so on, so I won't go through that detail. Any positive progress on the geopolitical tension to end the war, right, will have a significant relief of the stock market, because it will reduce inflation, right, and the commodity price, and it will help the global growth. Okay, so we need to prepare for that as well. If the war doesn't get worse, right, then the market will, if the war prolonged, but it doesn't get worse to the extent of a World War III type, right, then we will expect more range-bound market. Yeah, because the market already factor in this news already, right? So we need to have some sideways strategies as well with some slight downside. Okay, if it doesn't get extended to like a war with the whole Europe. Okay, but definitely if the war is prolonged, we don't expect the trend to be so nice already, right? If we take off, then the next resistance, I'll show you where the resistance line that you need to watch out for. It may not take off that far. So after some time, there'll be profit taking. So you need to prepare for just moderate bullish to sideways market. Yeah. But also when the tension is relieved, right, then it can take off to the next range. Yeah, that means instead of peaking, then it can break above the resistance and recover. But we are not expecting the recovery like in the bullish market. We are expecting the recovery more because the valuation has already penalized a lot. Okay, so it's a different type of recovery. So this is what I meant here. Russia-Ukraine war price impact on the current market is likely already factored in, but the sanctions impact may persist until end of the year. So it has a lot to do with how long US and Europe sanctions, right, or Japan, right, is going to impose on Russia and whether they extend to China, right? So because it is these sanctions that increase the commodity price as well. Yeah. So we need to look at the sanction progress, right? If they make it worse, I think they will do whatever it takes to stop the war, right? Because the war is very damaging. Yeah. But once Russia agree, right, then those will be lifted. Maybe not immediately, right? They won't lift immediately, right? To at least teach them a lesson. Okay. But as long as the market it goes up and down based on anticipation of the future. So the moment they see some positive progress, right, the market can recover. It doesn't have to wait for everything to be positive, right, in the economy to recover. So this is very important for you to take note. The market change, right, 6 to 9 months ahead of the actual happening. As long as they see positive development, right, market can take off or cannot go worse, then the market will bottom. Market bottom when the anticipation that it cannot get worse from now. It could be bad, but not worse than now. Okay, then you monitor the technical chart, right? This is what is happening in the chart right now. You can see a triple bottom in the QQQ chart. Yeah. So I already mentioned here, key risk is war is prolonged or extend beyond Ukraine. So the key commodities to monitor, I already mentioned just now, like oil, wheat, and I'll show how bad it is, right? In this case. Yeah. Let me show you wheat. Okay, so this is wheat futures. Okay, because of the war, you can see how bad it is. Just to show you the impact of this. I can see the war ignite over here. All your TA can help as well. Okay, right. So it's downtrend, then it break above this downtrend line, right? Higher low, higher high. Okay, this is the one. I mean, that's if you trade futures. I don't encourage you to like trade so many instruments. I used to trade commodity futures in the past, but end up right, you will have too many markets to monitor. But it could be useful for like once in a blue moon opportunities if you have the skills handy. Monitor more than one market, or you can buy those stocks. Like for oil, it's easier, right? You can buy XLE or USO or the specific oil companies, right? Wheat is a bit different, right? Wheat is spent not in a particular company. Yeah, so you can see it is spiked from $800 to 1,000 plus. So you can imagine how impacted is the FMB, right? If the wheat, right? What type of company will be impacted when the wheat futures become so high? Wheat price. Yeah, there's also corn, right? But it has it's around here right now. Okay, yeah, because Russia is a big exporter of that. Okay, so it may hold around EMA 20. Okay, then corn price. Okay, just to show you some chart, corn futures has been going up for a long time. Oil futures is here, right? This is oil. Some of you asking whether is oil stretched? Yeah, at this point it's stretched. Why is it stretched? Right? It's you can see the profit taking is huge. Why is that so? Let me show you the history of oil price, just to give you some idea. Because it's almost the all-time high, as in the U.S. financial crisis. Right during the U.S. financial crisis, I trade over this period so I can understand. This is the extreme of oil price at that time. Not because of demand, because a lot of speculation also. Right? I don't think a lot of this is because of demand. Okay, it's because of people speculate. Okay, yeah, because of the war. Right. So so when it's not so bad, right, then it will come down. Yeah. So I don't expect that it can easily penetrate this point. So you have to watch out when it rallies. Okay, especially when it's a parabolic up. Okay, so this is where but this support can still hold because the war has not ended, and when the travel restriction relief, right, then oil demand will still be there. So if you want to trade oil, right, then oil related companies or ETF, then this is a good support, right, a conservative level to enter, which is when the oil price is rebounding at $95. Okay. Okay. So if you don't want to, so you can then energy stocks, right? So over here, conservative entry, of course, is around this level. Okay, you can see this one is a stronger support compared to this EMA 20. Okay, so this is a good hedge for your portfolio in case there's a prolonged war. Yeah. Then the USO XLE will be better because USO is a fund that has futures. So futures has something it's called contango effect, a little bit like a time value decay. Yeah, so not advisable for long-term investment. This one for short-term trading is okay. Yeah, it's an ETF that you can buy. This is an oil fund. Okay, so it's highly correlated with the oil commodity price. Okay, but for long-term investment, not advisable because it will have, for options trader, you will know a little bit of the time value decay effect. Yeah, although in futures we call it contango effect, it's a bit different. Yeah. Okay, so for investment, it's better to if you're looking at long-term trend opportunities, then XLE would be a better choice. Although XLE is not primary oil itself, yeah, but it has a big composition of oil company. Or you can trade specific companies that are better fundamentals among the oil stocks. Okay, I already posted some of them in the Facebook, right? Yeah. Okay, so these are the commodity price. I won't have time to cover all the commodities because we are not trading commodity stocks.